Hello everyone, good evening. Let's begin our Saturday webinar. So for those who are new to our Nimbus Capital Patreon, Saturday webinar is a little different from Friday lah. Okay, Friday one is more of a chillax, no specific topic or agenda, but the Saturday one is very simple, straightforward. It's very structured. I'll go through my portfolio, any updates to the portfolio, what kind of movement are we looking forward next week, and any potential trades that we can take, or potential trades that we may want to cut loss or take profit, all those kind of stuff lah. Okay, so it is like the meat lah, the meat that you want for the upcoming week lah. Okay, but anyway, congratulations to anyone or those who managed to get all the YOLO earning trades that we got for last week. It was one of our best performance week in my trading career lah. Okay, in my trading career, in terms of dollar profit wise, is one of the best. Not one lah, it's actually the best in my trading career, because we actually got 4 out of 4 earnings for that week. Not only that, every single one of the earnings, the stock moved about 20%, 15%, 20%. So it's not only a very big movement, right? We actually get all of them like on the dot. And not only that, we are also getting both on the long earnings and the short earnings. So we managed to predict correctly on the direction also lah. Okay, so if you manage to get them, you earn a lot of money for this week. Congrats to you. Hopefully it's like I'm gonna pay for your June holiday lah. Okay, so now June holiday is starting already. So let's begin with the portfolio before I go through all the macro related stuff lah. Okay, so now the portfolio, I share with you guys already lah. Okay, so my year to date ROI is now at 29%. So last week I was at like 15%. So now I'm almost at 30% now. Okay, I basically doubled my portfolio profit within this week. So you can actually see my net profit loss is actually close to 60K already, USD 60K. Last week it was around like 30K like that. Okay, so that is what I mean by this week. This week was actually one of the best performing week. In fact, if you are looking at the total capital, I started off the year with 200,000. So if let's say I was back in last year, right? Last year I started off the year with 120,000 lah. Okay, 120,000. So if I make this kind of profit on a $120,000 portfolio, right, it's actually 50% ROI already. So right now, because now my portfolio is a lot higher in terms of the capital wise, is 29%. Okay, but you can actually see we kind of have a slow start, quite a bit of a slow start, all the way until sorry, where's my pen? Okay, we had a slow start all the way until February, nothing much. And then after that, we pick up from February until March. And then after that, from entire April to May, right, a bit of retrace, and then we pick up again now. Okay, so this is also to tell you that a professional trader, a full-time trader, we are not every day making profit left and right, money coming down. No, there are actually weeks or even months or even quarter. Actually, last year there was one entire quarter we were making losses lah. Okay, so we do have this kind of rough period, but the most important thing is that you need to be able to know what you are doing. Make sure you are holding a long short portfolio so that you are not flush out from the market by very crazy movement from the market. Okay, so let's go to the open positions. So now let's go to the close position first. So basically you can see there's a bunch of trade close within one day, because we got Dick Sporting Goods. I managed to get 10K out of it. And then TLT, we cut losses. So I lost about 1,007. So you can see TLT, right? The loss isn't a lot, because we have a short position here. We have a short leg. And then the long leg, right? There's actually quite a significant premium left also lah. Okay. So even though, right, even though the original intended risk for this is around $4,000, I actually lost only about 1,000, 1,700, around 1,700. Yeah, so I managed to reduce my loss also lah. Okay, so for those who came for the session at the City Index, this is the basis of long short portfolio lah. Okay, you are going to cut your loser short and then make sure that your profits are running lah. Okay, and then of course Best Buy TP about $6,000. And then Gap I only managed to get $3,000 because the stock actually retraced, but after that it kind of rally backs all the way lah. Okay, and then Dell got about $3,008. I'm not sure why my Dell is so low. I was expecting a lot higher lah. Okay, but nonetheless it's about there also lah. So new trades that were open last week. Hershey we opened a short position, and then we have also entered our first Singapore position since like don't know how many donkey years back lah. Okay, and that is SATS. So SATS, right? Okay, let's go through SATS a bit. It's so hard to pronounce. SATS. Okay, let's go through SATS a bit. So recently, in their most recent earning, they actually 10 times their profit lah. Okay, you can see how the first half and the second half, right? Their profit is actually recovering. Not profit, revenue is recovering, on top of which the margin is also recovering. Okay, but of course, if you look at SATS, right, it is heavily coincide with the amount of air travel that is happening. And if you look at SIA, right, SIA, Singapore Airlines, actually rallied quite significantly already lah. Okay, and in fact they are doing so well that they are giving out like 8-month bonus, 9-month bonus. I think last year there was like 12-month bonus, quite crazy bonus that they are giving out lah. Okay, but the SIA stock itself has rallied already. So considering that SATS is also pretty much aligned with SIA earnings, right, I can see that this is still very, very value. The current share price doesn't really reflect the kind of recovering that SATS is also having. So I do think that going forward, right, it has a long way up lah. Okay, I believe this is the bottom because the COVID period over, and I think we should be recovering back to pre-COVID level around $4 or even $4.50. Okay, so there is another encouragement that is coming in, and that is actually dividend. So they are resuming dividend now. Okay, previously they do give out dividend, but after the COVID-19, they stopped paying dividend for about 2-3 years, and now they are resuming back again. So in fact, previously, right, the main reason to own SATS was the dividend, mainly because the return is about 5% or sometimes even 6% per year lah. So that's actually a very, very good return, on top of which you are actually seeing a very nice capital gain on the stock also. In fact, SATS was doing very, very well, even though SIA during this period was actually crashing quite big, mainly because within this period, right, the oil prices were quite high lah. Okay, so right now I do believe SATS is very, very undervalued, and it can go up a lot higher, on top of which you are also going to get some dividend along the way lah. Okay, so this is not really a trade because I'm expecting to hold this position for quite a while, and in fact it may even go into a long-term portfolio lah. Okay, long-term portfolio in the sense that as long as the fundamental is good, the stock is like not crashing, right, I think this is good to hold because the dividend is going to start rolling in lah. Okay, and in fact I will probably buy this on dip also. So it's one of the things that you can consider for a long-term portfolio, where eventually once the dividend payout increase, right, you're actually going to get a lot, especially when you get it at this price level lah. Okay, of course now it's not a lot, it's not much, it's only 15 cents on a $2.70 stock. It's not even like 1%, but as they recovered and as they increase the dividend over the period, right, you're probably going to get like 8%, 10% because you bought it at such a low level. Eventually when SATS rally to like $5 like that, and then only at $5 you go and buy, right, then of course your dividend yield is like 3-4% only, or maybe even 2-3% only. But if you get it at like $2, $3, right, maybe your yield will be much, much higher lah. Okay, in fact, for those who know me from very, very long time ago, I do dollar cost averaging. I do dollar cost averaging on STI ETF. Only STI ETF, nothing else. The main reason is that I want the dividend from STI ETF. I don't need anything else. I don't need growth because my trading portfolio is growth. I don't need growth stock at all because my growth is already very, very superb on the trading portfolio already. That's why I dollar cost average STI ETF for over 10 years. So my average buying price for STI ETF is actually very, very low. So because of that, right, I'm actually getting about 7 to 8% dividend per year from STI ETF alone based on my average buy price. Okay, and then everybody is like wondering how come my dividend yield is so high, because at the current price of the STI ETF, the dividend yield is only like 3% like that, or you'll be lucky to get 4% lah. So these are the kind of things that you have to consider long term lah. Okay. Okay, so Sets, I hope I am clear on why we enter this position. So do not expect like a quickie, like today in, next week out, that kind of play. Don't expect that kind of play. You may end up holding it for very long, but I do believe that it is a very good stock to hold for long term lah. Okay, so that is for Sets. Hershey, I think quite clear cut, mainly because we have entered before. We entered Hershey before, and then we lost money on the first trade. I think previously we entered here, it went in our direction, and then after that it just went against us now. Okay, so now Hershey we are re-entering again, and the fundamental everything is still the same now. Okay, so what we think is that maybe here, right, the rally isn't justified now. Okay, and in fact the high cocoa prices probably will start weighing down on the earnings. So maybe the high cocoa price wasn't affecting the earnings here, so the stock market shrugged it off, but maybe in this earning it will start affecting their margin very negatively, and then it may start to crash. So one good thing is that because it rally higher, right, it allows us to short at a higher price. It allows us to put a stop loss at a much safer level, and not only that, we are able to get like a very good strike price now. Okay, so even if the stock goes down to only like 180, right, or 175, we are going to profit a lot from our options now. Okay, previously when we entered like here, like if the stock go down here, it's only a bit, not much profit, but from here to here is quite a lot lah. Okay, with a very nice stop loss level. So that's the reason why we re-enter Hershey, because we have encountered a lot of trades where we actually enter too early, the stock goes in the other direction, but eventually it goes in our direction. Okay, we were just 1 month or 2 months early. So I am keen to believe that Hershey is in that kind of situation. Okay, so these are the two new trades that we have entered, not counting all the one day profit. Okay, not counting all the 1 day profit. Those are the two new trades that we have entered. Toll Brother, okay, Toll Brother, right? It is doing somewhat okay. It's doing somewhat okay. But maybe, right, maybe next week I might take profit, because next week we actually got NFP coming up. We got non-farm payroll and unemployment coming up. Of course, it can still drop like if the datas are bad or datas are good, and then market think there's gonna be a rate hike, that kind of stuff. Okay. So I'm a little bit torn on whether I want to hold Toll Brothers or not. Mainly because I mean, if Toll Brother rally, then we are going to sort of forfeit that much profit. Okay, $5,000 profit right there. But as I said again, right, we are holding a long short portfolio. If Toll Brother goes down because market rally, then some of our long position is going to go into profit. Okay, so the question here is, do I think market is going to rally? If I think market is going to rally, then I will probably TP first, and then hope that my long position will rally when the market goes up lah. But in this situation, right, it's quite hard to say. I honestly don't know where the market is going. But because of that, right, I will probably continue to hold on to Toll Brother lah. Okay, so that is the advantage of a long short portfolio, mainly because you don't need to care where the market is heading. You are going to get profit either way lah. Okay, so that's the current situation we are in. Okay, Palantir is still there lah. Okay, from quite some time back, but recently Palantir kind of like a bit yo-yo here, yo-yo there lah. Okay, but it is just ding dong around this position here. It's just going sideways here. So I do believe that as long as $20 holds, right, it should be able to rebound. But if $20 breaks, then of course we have to stop loss lah, for the option folks also lah. Okay, so in this case you can see Wednesday and Thursday it kind of rally, and then Friday kind of like muted a bit, but eventually it ended in a doji lah. So not really sure what's going on there also, but we are definitely going to hold on to the position lah. Okay, mainly because the expiration is quite, sorry, give me a while. The expiration is still very far away, so we have the holding power on this. Okay, it's in September. Okay, and next, okay, Adobe a little bit scary, mainly mainly because we are hitting the short leg lah, okay, for 460. So you can see here Adobe, right, is at 444 already, okay, but there seems to be a bit of rebound coming in. So even though we are short on this, right, the fact that it is going down too fast is not good also, because we have a diagonal lah, okay. If you have a stock position, then different situation lah, but for those who are holding this diagonal, right, you can see how much money the short leg is losing. It's losing about $5,000. So even though the long leg is like $7,000 in profit, right, the net profit is only 1,500 lah, okay. So the short leg expiration is in June 21st. So my hope is that before June 21st, right, it can go back up above 460. Okay, so in this case, the Adobe going up is actually profitable for our position right now, meaning to say our profit will increase significantly if Adobe go back up above 460 lah, okay. And because of this candle, right, it does seems like it will lah, so we'll just leave Adobe alone. But long term wise, I think it can go down also lah, okay. So meaning to say that after June expiration, Adobe is back above 460, then we hope that for July and August it will resume the downtrend now, okay. So maybe it will do a small rebound and then after that go down. So this is the kind of behavior we are expecting now. And if we do get this kind of behavior from Adobe, right, the profit is going to be ridiculous. The profit is really going to be very significant and quite high lah, okay. So that's for Adobe. But you can also see Adobe was affected by the Salesforce and Gang lah, okay. Salesforce actually dropped like 22%, and then we have MongoDB dropped like 23%. So all the AI company are actually now dropping quite bad lah, okay. So now this is something that I want to cover much more in detail later. But Adobe is one of those AI company that don't really have any revenue from AI. The mouths only say AI, the stock rally, but in fact at the back end, right, they are not really generating any sales, any revenue, any earnings from AI, which is why now it is dropping. And in fact, you can see how bad Adobe is doing compared to Palantir, because Palantir is actually still making money from their AI products lah, okay. So it doesn't mean that AI crash, AI bubble, all the AI stock gonna crash. No, there are actually good ones out there. There are actually very, very good AI stock that can rally. It is only the bad one that's going to drop. So which is good, which is bad, that is where your fundamental analysis come in, okay. Cannot suka. Next, Blackstone Mortgage. Okay, Blackstone Mortgage, like not here, not there, not here, not there, but I mean we are in profit, okay. We are in small profit. If you want to run, I don't blame you, but I'm gonna hold this position now, okay. So Blackstone Mortgage actually rally back up a bit on Thursday and Friday, and my hope is that it will hit here. It will hit the previous support and then it get resisted and then it start to go down. Okay, so that is my hope. It is expiring in July. It's a vertical, okay. It's a vertical, it's expiring in July. So we still got time on this. So I'll just let it be also. And then I think the set one is SEMrush. Unfortunately, SEMrush kind of like came back down. I mean, came back down it's still hovering there, okay, but it's not rallying. I needed to rally to like $17, $18, that kind of level, okay. But because it is hovering, right? Hovering, sorry, SEMrush is here. Okay. Because it is hovering around $15, right? The option is actually kind of like losing money lah. Not losing money, but majority of the profit is gone. Previously, I was up about 3,000 plus, and it is now gotten back down to $770. So SEMrush is also expiring on July. So once again, I'm gonna hold this, okay. I'm gonna hold this till expiration and hope for the best lah. Okay, so then we have AMR short position is still there. So once AMR also rally quite a bit, so I'm also hoping that it will get resisted here and then start to go down lah. Okay, so what you are seeing is something like this. Sorry, you have the drop, and then what you have is a bear flag, and then you have another drop, and you have another bear flag, and then another drop lah, okay. So that kind of movement, I'm expecting that kind of movement. But for those who are new, this stock is chosen based on fundamentals and macroeconomic drivers. Okay, it's not because bear drop. Okay, in fact, for those who know, we actually shorted somewhere here, okay. The very first short entry, sorry, not first, the second short entry actually came in here way before the drop, okay. So it's not because bear flag or moving average. In fact, if you are looking at this, right, if you are looking at all my chart, there's no technical indicator at all. Even when we enter our trade, there's literally but very little consideration on technical analysis. We don't care where the chart is. If fundamental is good and there is sufficient catalyst, we go for the trade. In fact, one of my one-to-one student, he's basically not using any TA at all, like we don't consider TA at all, like almost zero consideration. Okay, so that's for AMR. And then we have sets okay. I went through sets really. Then Lumen and Allergen, I'm not going to go through okay. It has been there for very long. They are basically lottery trade okay. We are waiting for a short squeeze to happen. So until the short squeeze happen, we will hold on to this. So you can see my overall open position also doing relatively well okay. It's at about 3.31%. So if I were to like exit all my position, right, then I'm probably up about 32%. Okay, so far I think my portfolio is meeting all the current expectation, and in fact I think it has exceeded expectation for this quarter or even this particular month itself. So I'm hoping towards the end of the year, I can at least get about 60% in return. The more the better, but 60% is what I am aiming for. Okay. So now with that said, right, going into next week, next week is important week. Okay, in fact, very, very important because we got a lot of data that is coming out. And these are not random data. These are data that we actually analyze and we actually need for our trade ideas on how we find trades. Okay, we have ISM PMI manufacturing coming out on Monday, extremely important. The key thing is to see whether it goes below, it stay below 50 or it goes back above 50 okay. So you can see the consensus is 49.8, so not much, not really a lot of movement. So okay, I mean manufacturing PMI not really that important, mainly because for US economy, the service sector actually contribute a lot more than the manufacturing okay. Then as we are talking about service, on Wednesday there will be the ISM service PMI. So this is the important one okay, because last month for the first time since 2022, right, ISM service dropped below 50, which means to say service sector is contracting. And as we all know, majority of the US employment is coming from the service sector. And if the service sector is contracting, right, then unemployment rate can actually start to go above 4%, 4.1%. It's quite dangerous, okay. But you can see the consensus is 50.5, meaning to say the service sector is expected to go back into growth but we shall see how okay. We shall see how. One thing to take note is also we are not just looking at numbers okay. We are not looking at numbers when you are trading with us, when you are trading with Nimbus Capital, don't adopt the attitude of number up good, number down bad, just looking at number going up or down only. There is no such thing. That's not macroeconomic. That I don't know what the hell is that okay. So don't think that you can follow one line, one indicator, you can predict the market already. No such thing. But we are actually interested in the details of the report itself. So when the ISM report come out, right, we will actually go through the actual report and see what are the information we can find there. So we actually do it on Friday. So next Friday, right, if you are interested, do come for the next Friday webinar okay. We will definitely go through the ISM report. And of course the most important one is Friday unemployment and non-farm payroll okay. So this is going to affect the 10-year yield, which will in turn affect the overall market okay. So the most sensitive stock to this is things like Toll Brother. Toll Brother is very sensitive to this, and if, of course all the tech stock also very sensitive to this So let's see if it's gonna maintain at 3.9 or it's gonna go to 4%. So the consensus is 3.9 okay. So these are the important economic data that we need to look out for. The first week of the month is always very, very important for us because of the ISM reports okay. So let's look at the market a bit. You can see the 10-year yield went back down again. So in fact, we have been trying to long 10-year yield for quite some time already with very little success. To be honest, okay, to be honest, very little success. I mean, we are not afraid to hide bad losing trade because it's all open. In fact, if you look at TLT, right, majority of the TLT trade in the past has been losing, okay? But it doesn't matter to us. And the reason why it doesn't matter to us is if we are losing money on TLT, then we are going to get money from things like Toll Brother. We are going to get money from things like Adobe short or other short positions that we are holding now. Okay, so it doesn't really matter to us. But the important thing is if TLT rallies, right, we want to be there. We do not want to miss the TLT rally. Okay, so I don't mind continuous entry on TLT until it rallies, okay? So now with the 10-year yield sort of like getting resisted here and going down, right? Meaning to say TLT can rally lah. So let's take a look at TLT. Sorry, this is the 10-year yield, okay? So where's TLT? Okay, this is TLT, okay? TLT we previously, I believe, entered here and then we take the loss here and then we entered here and then we took the loss here lah, okay? So I think we can probably enter again, but it is also, of course, because we have hedging on other positions, so we are going to try for it again lah, okay? Based on the fact that the 10-year yield seems like coming down. So because Friday is the non-farm payroll and the unemployment rate, right? It will definitely affect TLT movement on Friday lah, okay? But I really think the yield is top here lah, okay? The yield is top here, and this should be the the lower high there lah, okay? This should be the lower high there. I hope cross finger lah, okay? So we may enter TLT again next week lah, okay? So we're gonna enter TLT until we get a very big profit out of it, and then it erase all the other TLT losses now, okay? So now so far for Friday, you can see S&P actually recovered tremendously. In fact, I think a lot of bear kena lah, okay, a lot of bears kena. Initially all the bull kena, then they go and short, and then after that market rally back up, they also kena. So now because this is like a very volatile, violent movement, right? But it doesn't affect our portfolio at all. In fact, I believe this week very few of us actually look at the index because we don't give a shit about the index lah. We are long short portfolio managers. We don't care where the index go. We are gonna make money either way lah. Okay, so no one cares about the index. No one cares about Dow Jones, all this kind of stuff lah. Okay, so I mean, if you wanna if you want to be part of the index, then by all means go ahead. But if you want to beat the index, then of course we cannot be packed to the in the index lah, okay? Aside from that, nothing really going on. I do hope gold can rally also, but gold seems like a bit stuck there lah. But as I mentioned before, right? Going forward, long term, my long term is one to 2 year lah. Okay, I do think gold can go up a lot higher. So if it's going down, good. If it get supported here, good. We are gonna enter lower lah. Okay, but for now, just let it be. So with all that said, let's take a look at some of the trades that we can take next week. Okay, so one topic that I would like to discuss is actually the whole AI bubble. Okay, so right now, from the recent earnings, right, Salesforce, Oracle, Workday, all these kind of Adobe, all these kind of AI stocks, right? Even MongoDB was a very famous AI penny stock that a very famous penny AI stock. Okay, sorry, not penny. A very small cap. Okay, a very small cap AI stock that a lot of people like, and okay, back then it was small cap. Okay, now not small cap already, but back then it was small cap. A small cap AI company that a lot of people make a lot of money also lah. But the thing is as I was looking through, right, as I was discussing with a few of my colleagues as in some other hedge fund traders, we start to notice that not all AI companies are actually making money. And I did cover this a bit yesterday also. And the reason why we short Dell, right? The reason why we short Dell before the earnings and we got this big fat profit, right? There's a reason to it. It's not simply because we see one red candle or whatever voodoo nonsense, okay? It's because I was actually looking at Dell's revenue. I was looking at Dell's revenue, and you can see the revenue, there's no growth in the revenue at all the way from like end of 2022 or Q3 of 2022 until right now, right? There's no revenue growth. I mean, yeah, okay. I mean, it's all like 24 billion, 25 billion, 21 billion, 23 billion. And now even in 2024, right, it's only 22.2 billion. Where is the revenue growth? So if you are going to make so much money on the AI data center, AI this, AI that, or the generative AI, a lot of this nonsense, right? Then where is the money? Where's the revenue? Where's the sales? So in fact, right, this is a hypothesis lah, okay, the theorizing. Of course, after theorizing, we will look for evidence and then we see if we can take the trade or not lah. But a trade idea will always start from the hypothesizing level lah, okay. So what happened is that during the AI craze, right, a lot of company like Dell, like Adobe, all this, right, they invested a lot of money in their capex. So they spend like millions and millions of dollars, buy all the Nvidia chips, buy this, buy that, upgrade their infrastructure because wow, AI gonna be a lot of money. And then after they put in so much money and do all this ready, right? They realize that they cannot monetize it. They don't have a product. They may have a product, but it's not making money, or it cannot sort of like return the level of growth that they want it to be. So what happened is that now what they did is they have thrown a lot of money into capex, and that capex is not generating any kind of return on the investment, okay. And I think this at this point in time, with all the earning gap down on all those company like Salesforce, Workday, all this, right, I believe it is the start of the trend where market is now questioning all these company already. Like 2 years ago, you say AI, but where's the revenue? Where's the money? We don't see any money, so they start selling down already. Because if you look at Dell, you can see how much it rallies from 2023 here, right? It rallies about 456%. But this 456% is not justified because we are not seeing 456% in revenue. We are not seeing 456% increase in net income. In fact, net income, you can see here 245 million, 600 million, 500 million, 462 million, 1.1 billion, 1.1 billion, then there's a 960 million. Okay, but in fact, if you look at all this, right, it is all mainly coming from the non-operating side. Okay, it's all mainly coming from the non-operating side. Because if you are looking at the operating income, right, there's actually there's no growth there. In terms of operating income, there's literally no growth there at all. In fact, it's going down. In fact, in Q1, right, the operating income is less than 1 billion, when previously they were making like 1.4, 1.7, 1.2. But for Q1, right, operating income is only 920 million. It fell below billion. So where are all the AI money? So Dell is one of the thing that we spotted last minute, and then when we spot this, right, the earnings wasn't out yet. The earnings was actually on the night itself, and we got it lah, okay. But I do believe there's actually a lot more company that are in a similar situation, okay. So now if you want to, so there is a reason why I'm not keen on shorting Nvidia. Also, a lot of people only know Nvidia lah, okay. When AI, the only thing they think of is Nvidia. When we say chip, semiconductor, the only thing of Nvidia. And the reason why I'm not so keen on shorting Nvidia is because yes, they rally 723%, but the rally is legitimate because we are actually seeing the money coming in. We see growth in the revenue. So back in Q3 2022, the revenue is about 5.9 billion, but right now it's 26 billion. You know, it went up like 5 times. Revenue went up by 5 times. So the stock actually going up 7 times is justifiable, because most likely the stock is also projecting further ahead and they think that the revenue can further go up some more lah, which is why you are not seeing that much of a pushback on Nvidia, but you are seeing quite a bit of sell down on company like Dell lah, okay? So these are the kind of things that you need to be able to identify. These are what we call catalysts lah, okay? So going forward, right, we are actually gonna look deeper into Dell and then see what's going on over there, and then after that we try to sort of find other similar companies like Dell that we can short lah, okay? In fact, to be honest, I also think that Dell actually can go down much lower, a lot lower. So in fact, when Dell kind of like recover yesterday, right, this is good, it go up, this is good, then we can short again, and then I think this can easily go back down to 100 like that, okay, or even below 100. So aside from Dell, we also have identified HPE. So when I say identify, right, meaning we just CC look only lah, okay, haven't do all the work yet, but we just CC look only. So HPE also similar, although it's not as aggressive as Dell or Nvidia, right, it's still rarely, excuse me, it's still rarely up significantly lah, okay. So from 2023, it rallied about 73%, but you can also see similar situation happening. The margin is falling off, and there's no growth. There's no growth in the AI at all. There's no growth in revenue. There's no growth in net income. And in fact, it's like even going lower, okay? So we are trying to spot all these kind of company to see which one we can short, okay? So what we have in mind right now is HPE, and actually we want to short Dell again, but probably we will wait for a bit of rally lah, okay? Because it does seems like there's a bit of deep buyer coming in, and hopefully this deep buyer not strong, and then after that it continue to crash lah, okay? But any kind of upward movement is welcome, okay? So imagine you are a technical trader that have no idea what's going on, don't know what to do, don't know fundamental, only technical. The most likely thing you are gonna do is, oh, super uptrend, oh, pin bar, wow, cover gap, buy liao. Okay, then after that, maybe 2-3 weeks later, it's gonna crash lah. Okay, so these are the kind of things that you have to look out for lah. So of course, for us, right, most likely we won't be entering so early, depending on how things are going, because what we want is we want the earning as a catalyst, and the earning is still far off. It's all the way in September lah. Okay, so we always want to hold through the earnings. So we are no rush to enter this. We can wait. We can wait for this. Of course, if it start going down, then we will enter lah. But if it recover, right, let it be. We are even happier. Why? Because the higher it recovers, and when the earning come, the further it's gonna drop, because now it's even worse lah. Okay, the only reason why Dell dropped so much here is because it is so high. It is so high. Imagine if before the earnings, Dell is like hanging around here. It didn't rally, it's just hanging around here. Then during the earning, it's not going to drop a lot already. It will just stay at that price, okay? So we welcome any kind of earnings. Sorry, any kind of rallies before the earnings. The higher, the better for us, okay? So Dell and HPE are the potential short position that we may take. So on the long position side, right, we are considering TLT, okay? We are reconsidering TLT again, and we may in fact take this on Monday, okay? Yes, we actually cut this position last week, but it's okay. We don't mind taking it again, okay? The other one is also Newmont. Newmont is the gold mining company, okay? So far it has been going sideways. It's being supported here, but as I mentioned, right, going forward in the next 1 or 2 years, I think gold can rally up further, meaning to say Newmont can actually go up even higher also. So we will see how the gold prices are doing, and then from there we will make the decision, okay? So this is actually on our watch list as well. So for those who have been with us from like quite a while back, I'm sure you all have heard me recommend Best Buy, not just before the rally. Yes, we entered here, but we actually were looking at Best Buy like way back already, okay? Way back already. So some of the company we identify, right? It doesn't mean we have to enter immediately, but when the time is right, we will enter, okay? Of course, Best Buy, we got the rally, but there was another company that we actually recommended together with Best Buy, but we didn't get it, and that is actually HPQ. This is HPQ, not HPE. HPQ, we actually recommended HPQ like way back, also somewhere here, around here, I believe, but unfortunately we didn't get HPQ lah, okay, but no reason to FOMO because we got Best Buy lah, okay. So there are a lot of all these kind of stuff that I'm recommending, right? You should really take down somewhere, take down notes, and then go and do your own homework, go and enter by yourself, because I simply do not have the capability to enter every trade that I say lah, okay. Because the portfolio need to be maintained, the beta value of the portfolio need to be maintained. I need to maintain a long shot. I cannot suka also, okay. I mean, you should have a similar discipline also lah. Okay, so now TLT most likely we will enter next week. NEM, Newmont, Newmont Mining Company. KIV first lah, okay, KIV first. Where's Newmont? Newmont is here. KIV first, we can consider. Okay, so now the next one is McDonald. So we entered McDonald before, we cut, but right now it does seems like a very, very good level to enter. So now, yes, we are entering because of technical entry, okay, technical entry, but at the back end, the fundamental work for McDonald has been done already. So it just seems that this is a very value price, very low price. I think we can go for McDonald again now, okay. So McDonald also very good because we got dividend coming up next Monday and it's $1.67, okay. So you can see on my City Index account, this is a live real account. You can see my McDonald here. I got about 500 shares, currently up about 2,600 USD lah, okay. The rest are losing money, but McDonald alone is making up for everything lah. So this 500 shares on McDonald, right, I'm gonna get the dividend and it's going to be about $800 lah, okay. But of course, I also hope that on top of the dividend, right, McDonald can continue to rally lah. So in this case, right, we will probably enter McDonald next week. So this CFD, if you are present yesterday, I entered this position yesterday lah, okay, if you are present for the Friday. But on Patreon, right, I will post the entry next on Monday lah, okay. You can put your stop loss around 240, and then I think this one can go back up to probably like 285 like that lah, okay. 285 or maybe 280 around there. I think should be doable lah. Okay, we can definitely enter McDonald again. And on top of which, we are also looking at Tyson Food. So Tyson Food is spotted by Yuan Shen. I think it's a very good spot. They actually crashed quite hard from last year lah, okay. In fact, during 2022, right, Tyson Food was one of our short position. You can see August 2nd, 2022. We shorted here and then like within next 3 days hit the TP level already. But in fact, it actually went down a lot lower lah, okay. So right now, I think Tyson Food kind of like bottom out already. And not only that, right, their growth is back, okay. The earnings growth is actually coming back. They make a loss and then the margin improve again, and then it seems like they can recover back to probably $80 or $75 that level, okay. So right now, just nice the stock retrace, so I think it might be a good time for us to enter Tyson. So these are some of the stuff that we are looking at, okay. So to recap, okay, next week we have the 2 ISM data coming out, very, very important. We don't care about the number is important, but we don't care so much about the number, but we care about the actual detail report, okay. We care about the detail report. We will go through the ISM report probably next Friday, okay. So do come for the Friday webinar. And of course, on Friday itself, we have the NFP and unemployment numbers, very important also. So on the potential trade on the short side, right, on the short side, we are looking at position like Dell, or we are looking at underperforming AI company lah, okay. All those AI company that is unable to monetize their AI products lah. So include companies like Dell, HPE, not HPQ, HPE, and of course we also still have Adobe lah, okay. Adobe actually can fall a lot further also. So these are the short position that we are looking at. And on the long side, TLT, we might go for it again. and then McDonald probably can enter also next week. Newmont have to KIV a bit, and then Tyson Food, I'm not really sure. We haven't do the work on Tyson Food yet. We have to do a bit of fundamental research also lah. Okay, but it does seems to be a very good potential on a surface level lah. Okay, so there's actually a lot of potential trade. It doesn't mean I will enter all. I may enter some, but whatever I enter is also quite reliant on what my portfolio is lah. Okay, so if you look at my portfolio, right, not counting Lumen and Allogen, my portfolio is severely bearish. Severely bearish. I only have one Palantir. Okay, I only have one Palantir because Semrush probably gonna expires in July lah, and everything else is bearish. So I do need bullish trades lah. Okay, I do need bullish trade, and in fact, 2-3 weeks ago we were full of bullish trade, and now the portfolio is facing another direction already. So this is what you have to manage. You need to manage like, okay, I need bullish trade, I need bearish trade, then I got earnings, I got NFP, I need to balance out a bit. So it's not like you like draw lottery like that, like put your hand into the bowl and then see which one you want to trade. Or worse is you see, oh, this one technical good, I will trade, that one technical bad, I don't trade. No, none of that. Okay, if you want to be a very successful trader across all kind of market environment, you must you must do long short. There's no way else. There's no way else. You can do all the simple stuff, like very shortcut, very easy, but those simple stuff only works in like a bull market, only works in uptrend. That's why during COVID, a lot of gurus, now all the gurus nowhere to be found already. Okay, during COVID, all strategy works. Whatever nonsense strategy also work. But you want to make money here, you want to make money here, you want to make money here, right? You must have a long short portfolio. Okay, so that's all for this week. So there will be a lot of trade next week lah. Okay, in fact, I need to restructure my portfolio a bit because like it's too bear already. It's too much bearish position. I need to put in more bullish position now. Okay, so as long as it is balanced, right? I don't care where the market is heading. I don't care the NFP number. I don't care the CPI number. I even don't care the FOMC lah. Okay, on how it gonna move my portfolio, because those that are going to make money will make money. Those that lose, we cut them short lah. Okay, guys. So hope you have informative session, and of course, once again, right, congrats to those who managed to profit big during this week lah. Okay, and I truly hope that we can earn more in the upcoming week. Hey, I'm so sorry. Next week actually have one more YOLO we can take, one more earning we can take, and that is Victoria's Secret. Okay, Victoria's Secret, the earning is actually on 5th June. So now it's already rallying up by quite a bit lah. Okay, so we can probably enter this on Monday, and then we wait for the 5th of June lah, which is a Wednesday lah. Okay, and hopefully, oh, you can see it's improving quite a bit. Hopefully it will go up like gap like that lah. Okay, so all this gap, Burlington store, A&F, all this apparel store all rallying like crazy. So we are going for another earning play on VSCO lah. Okay, so cross finger, maybe another good run next week lah. Okay, in fact, there's another apparel company called PVH, but PVH, right, a bit not keenly. I don't know lah, you all can do it lah, but I probably wouldn't play this. Firstly, it's a little bit expensive, but secondly, right, I feel it's a bit high already. A bit high already. I mean, it can go higher. I can go higher lah. Okay, but I will prefer to take Victoria's Secret. Given the capital, right, I would rather play more Victoria's Secret than going for PVH lah. But it's totally up to you lah. Okay, but don't miss Victoria's Secret. Because I mean, I don't know lah. Okay, we can probably play something, get something from this lah. Okay, guys. So yeah, we are done. Thank you. Have a good weekend and have a good night. Lulu actually I'm not so keen on Lulu leh. I mean, you can play Lulu, you can definitely play Lulu, but I'll just go for Victoria's Secret lah. I mean, you can go for it. You can definitely go for it. it has a chance also, but I mean it's all coin flip lah, okay, because we are just following the big trend, which is all the apparel company lah, okay, all the apparel company all going up. So we just like, as long as is this apparel, is this a shoe, is it selling like sandals, I don't know, like whatever, can you wear this? If you can wear it, let's buy it. So that's basically the thought process lah. So the thought process behind all this apparel is a little bit different from Dell lah, okay. Dell, I do think there's a legitimate reason behind why we want to short, but for company like Victoria's Secret, Gap, On Holding, all this, right? I mean, we are just following the bigger apparel sector that is rallying like crazy. I don't know why also. In fact, I have no idea why they are rallying. Is it like what? It's not even Christmas or what? Like what? I don't know. I have no idea. But if it's going up, then we join in lah. Okay, guys. Thank you very much.